Hi, welcome to Market Alert for Monday 29th of July 2019. So Friday finishes off with stocks soar to record highs as corporate profits hit 8-year lows. It was the best of times, it was the worst of times, and that's how it will be viewed when it all starts to unravel. So let's have a look at the Dow, and starting off with the daily. You can see we're sideways, and we know the reason for this. I don't need to keep going over it, but just to remind you, as we look at the Forest Factory, everything starts, or the news starts from tomorrow. We've got consumer confidence, but the big one is this. It's the FOMC on a Wednesday, and this is showing a 0.25% forecast in the reduction of interest rates. Let's see if it happens. If it does, this will send the markets into the stratosphere initially, and then when the reality of what is going on enters the market, then you'll see weakness come into it. No doubts about that. And then on Thursday, we head over to the UK. Just press the right one here. We've got Bank of England inflation report, and you can see there that the vote is to keep rates unchanged in the UK at the moment. And then Barmy-Carney is going to be speaking at 12:30 as well, so keep that one in mind. That's for Thursday. And then Friday we've got the non-farm employment change as well, so this could be very interesting to see that they forecast this lower than the previous month, to allow them to get away with the drop of 0.25% in the interest rates. If they do this, record lows in unemployment, down at 3.7% for the US, stock market at all-time high, and we're going to reduce interest rates, which is completely the opposite of what you would do. So let's see how long this lasts. So it's obviously desperate stakes from the central bank there. So Friday, the market not doing a lot, and don't expect a lot today and tomorrow either, unless somebody drops some sort of information into the market beforehand. But you can see Friday they're very, very quiet, trading in a range of just 50 points or more. It's probably about 70 looking at that, so not a lot there. And the same for the pound. If you can find the pound, you can see down on Friday. Just adjust this chart so we can see they're taking out the low at 123.81, and in the 15-minute chart it was doing absolutely nothing, and then overnight the markets moved lower. As I said last week, not a lot you can trade at the moment, and this is the same for Bitcoin as well. It's become really sideways, and as you step back and look, you can see, apart from Saturday, there was a bit of volatility. Yesterday the market came down and tested the 9,080 level, and are currently sitting at the 76%, but getting into a bit of a sideways move, and those big spikes, as you can see here overnight, the market being brought back. You see that there, and now sitting above the 200 bar moving average. But apart from this bit of a shakeout here, and then brought back, the market's going through those tiny range bars again, which you can see in the 4-hour chart there. Very quiet, apart from the volatility overnight. So other things to look at before we conclude. Deutsche Bank still staying above the 200 bar moving average. Levitation working very well here. In the implied volatility, this dropping down on Friday to 11.18, still below the 20 bar moving average from 11.46 the day before. And as the market remains quiet and interest rates go up and the underlying market moves higher, then we can expect to see this move to the downside towards that a retest of the 9.96 that we saw a few weeks ago. 10-year still inverted, same as Thursday, minus 0.02. and still showing again that there is a recession coming down the line within a year and 3 months is the average, as we've covered before. Okay, so that will do it for this one. As I said, we suffered all last week waiting for the markets to do something. It's not going to. Everything, really, the market's pinning its hopes on the quarter of 1 point. If they go for half, well, it will just send the market into space for a while. And like I say, that's the important thing here, is the reality kicks in that trying to keep the markets afloat when it's at all-time highs is a dangerous business. But it will work initially, as it does with all sorts of market heroin, I think it's being called, where you just pump it into the market. The effects become less and less, but initially the market will go on to make new highs if they go with the 0.25% drop. And yeah, we'll see what happens after. So the market's going to be fairly quiet until this decision is released on Wednesday. Okay, that will do it for this one. If there's anything to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.